Monday, June 2nd, 2025. Market analysis, Stan Ehrlich. Good morning. Got a little cold, so I got a little bit of a cough. Beg your pardon in advance. I usually start out with stock market indexes, go to futures, and then I've got a few stocks that I'm following, Tesla and Apple, or a couple. So, what have we got? Remember that in early May, early to mid-May, the market had a very strong rally, and it ended with overbought conditions around the same price levels where it had bottomed out back in November, December, January, and early February, which is a significant resistance area. So being overbought a few weeks ago and reaching that resistance area in a general sense, not super accurate, we did slip back down for several days and a pretty good break. Almost closing a gap. Don't forget, we've got these gaps to close at lower levels. There's no rule that I know of as to how long it takes to close the gap. Now, usually it is within a few days, or maybe sometimes the same damn day. So after that, there's no gap the next day, of course, but it may gap up or gap down, and later the same day close that opening gap. So overbought, resistance, pullback, didn't close some gaps below the market, and that's approximately the same in other indexes as well. There's gaps that close below. We came all the way back up and made a new high on Thursday of last week, just 2 trading days ago. Well into new high ground, and it could not hold. All the way back down, and actually got lower than the previous day's low, creating a reversal for a short period of time. But by the time the market closed, we were back up very slightly higher on the day, so it was a bullish engulfing at the close of business. Normally that's bullish, but when you're in resistance areas and you've just been overbought, that changes the situation 180 degrees. Now, yesterday, Friday that is, we made a new low from last Thursday, and Wednesday of last week, and Tuesday of last week. And this is, of course, for the ES, the E-mini. Same thing for the micro, by the way. And came back up to close relatively steady. So no big break and no follow through the downside, nothing like that. Today, we have an attempt to make a lower low, and some indexes did make a minor new low from Friday's lows, not the E-mini. And right now we're trading a very teeny-weeny bit higher on the day, near the high. But I remind you, in the same approximate price range where it has been so far, topping out again last week and a couple of weeks before that. So yes, there's the possibility it could come up a little bit more. I guess I have to say 59.50 and even a touch higher than that. 59.60, yeah, maybe. But don't push it. As long as it stays where it is or a tiny bit higher and then starts to settle down and get lower and break today's lows and break Friday's lows and close below those lows, then we're back on track from what I expect to be the beginning of a downside break. So I am looking for maybe this week a break below 57.57. Close the gap, 57.15 approximately. These are not exact prices, but they're pretty damn close. Then coming down to probably 59.97, 55.97, and maybe down to 55.50. So I've been saying probably 5600 to 55.50. That's fine. And we'll talk about something lower than that if we get on the way down. Here's simply the 1-minute chart. And you can see that we're close to the high at the moment on the E-mini, but at a resistance level where it's topped out inside intraday and dailies very often in the last day and a half, including today so far. Top right there, a little bit higher, and we're right there at the moment. Now, this does look to most people like we're going to make new highs. And frankly, to me, it also looks like it could poke up into slight new highs. But again, I look at the daily data charts for the bigger picture first. Then I try to fine tune it down into minute by minute. This could, well, it's pushing right now into minor new highs, be a high, but I can't tell, so I'm agreeing slightly higher. Then I hope, I expect, I think down. We'll see what happens. S&P 500 right behind the SPY. Doji so far around unchanged, up a couple of ticks, hardly anything. Again, same kind of comments. Now the spider, 1 minute, almost new highs. We've got QQQ, did make a minor new high above Friday, but it is more importantly on the longer term daily charts in the same range where it has failed to continue to rally. And we got one ER sell signal. It didn't work the way I'd like. It did work for a couple of days, and so it was profitable. But I was expecting more of a big break. Now it closed one gap, and there's a very large one to close, and you need a breakdown to 491.5, and I am expecting that maybe this week or next week, but relatively soon. Next, we've got the QQQ, same basic story. Resistance, overbought conditions recently, in the same problem area we've seen again recently. So I am not going to be surprised if all of a sudden it starts to break down. Next, we've got the NASDAQ daily. Again, all of these indexes, basically all of them, are in the same situation, having been overbought recently or are overbought at the moment and or close to, and or the last couple of days, like this was overbought on Thursday when it made a new high and couldn't hold it. That's pretty bad. So just because we came back up a little bit, yes, Friday end of the day, does not mean it's changed anything, and I'm looking for this rally to fail. Okay, the 1 minute chart. Yeah, we're real close to making a new high for the morning session. We'll see what happens. I'm looking for lower levels. YM. Lagging behind a little bit, not anywhere near a new high for the move like the other ones did last Thursday, and then the YM didn't do it either. So it is basically more weaker recently, not able to get into new high ground, and lower on the day momentarily, not by much. And it did make it a little bit below Friday's lows and almost below last Thursday's lows. So, no change in commentary. 1 minute chart. Lower high, lower, 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 last few hours. Next, we've got the Russell, RTY, lower on the day. Well, actually, it's up on the day just a tiny bit momentarily. No reversal, up against resistance. Gosh, I think these things could fail any moment, but I don't know. We'll see after I'm at the end of the YouTube here. Next, we've got Russell, 1 minute. Yep, right up against the same problem price ranges. You go horizontal and you find your support and resistance levels. Next, bonds. In a course of 2 weeks, which is a fairly short amount of time to have 3 bullish ER buy signals, and that is the green daily candlestick. Custom code. White, I don't care too much about one way or the other. Yellow means it's either overbought or oversold, but during overbought or oversold or within a few days after, if you see a red, bingo, major sell signal, big break. Modest, not a sell signal, I shouldn't say major. I don't know if they're going to be really big moves or small moves after the signals. Modest move down, but it's a high. Another high. Modest move down, pretty good. Green, bottom, a whopper for months. And also, to the exact day, way back October 23, a huge buy signal turns out to be the bottom for months and a gigantic move. What did it do? It went from approximately 107 or 8 all the way up to 125. So having 3 of these gives you the impression that it's going to be a profoundly big bottom here. Excuse me. And I cannot rule that out, but I cannot guarantee it by any stretch of the imagination. Now down today nicely, 20. 20, is that 20 or 28? I got a line right through that. And nothing wrong with that. Remember, I do expect the probability of the markets coming back down into the middle of the range of the bullish engulfing within a few days. And this is 2 days afterwards, and it did get around the middle of the range of last Thursday. So that could be it. This is exactly where, about the middle of the range of the bullish engulfing, ER3 scalp and overnight gets into a new long. So right in this ballpark is where my other part of ER signals goes long. Remember, I got ER1 scalp and ER1 overnight, and I got ER3 scalp and ER3 overnight, or ER signals in general. Next, we've got a bearish engulfing. No, we don't. No, we don't. We just have the same high, it looks like. Today's high in the, oh, come on. There we go. 10:30, and the high on Friday was exactly the same. No bearish engulfing, just a bit of a dip here. Two highs at exactly the same price. You know, when we get back up there, we're going to have buy stops. So it could push right through it very fast. So you got to get to the resistance. Then you got to get above the yellow zone resistance. And above the yellow zone is 111.17. And then we could really come up a lot more. So at the rally high, we got red. Perfect. And you know, you've seen this if you watch my YouTubes a lot. And I've got 600 of these things. Excuse me. That I show you these when I can, real time. If not, at the very worst, the next day. So, I'm still friendly to interest rate futures. There's no change of opinion. Crude. We could have a new high close, but that's not quite good enough for me. I want to close above 64.25, above this resistance area, which has stopped rallies before, twice before in the last couple of months. And around where we are right now, it stopped it more frequently. So we're in this little zone here where it could start to pull back down. If it doesn't, and it pushes through here, then we've got to move very likely up into the 70, low 70s range. Next, natural gas, starting to turn up. Now, this is not what I would want to see in reference to the head and shoulder top, which I've been following accurately, very accurately, forecasting the moves day by day in advance for weeks. I caught the last shoulder high, time and price very close to exactly correct, both time and price, on May 12th. It was a couple days late, and the price was just a hair, a few ticks lower than I would have forecasted exactly. But if you come so close like this one to doing what you expect, you're almost bullseye. One circle or, away from the bullseye. So, darts. So this is not good. I would have expected, and I still do, that this week we'll be crossing below under these two necklines. Pardon me. So we got two necklines. Why? There's a possibility one would draw with reason across this low, which was on January 3rd, a pivot point, because it starts the double shoulder there. And it is the lowest low when the shoulders, plural, start. But the lowest low after the highest high in the first shoulder is more classically, by far and away, the starting point, and that means January 31st, and that line is almost flat, not quite, downward slanted just a little bit. And that line is, for the next couple of days, at around 3.369. That's the one I want to close below. Yeah, 3.36. And then we're off to the races, supposedly. Hey, they don't always work. You have to watch how they're progressing. Sometimes they work super fast. Sometimes they work very slowly, but the word work correctly, of course, is the primary word. So I don't like this. This is the beginning of ruining, maybe, but it's not dead yet, the head and shoulder pattern. If I start closing, let's say above 4, then I have some serious doubts as to whether this is going to be a head and shoulder top like it was up to and including Friday. Today, I throws a little bit of a question mark, but I really don't have enough of a rally to kill the pattern. You still got your last shoulder on time and at the price. You've got the little pimple on the right-hand side of this where you had a little pimple on the left-hand side of the left shoulder. So all of these things match up timing-wise, price level-wise. I like it. This does not ruin it. It just throws a little question mark at the moment into the pattern. What about heating oil? No surprise, it's also rallying a little, but its trend is basically still down. You don't have any higher highs of any consequence. You've just got a little bounce rally in a bear move at the moment. I am still looking for lower levels below 1.9 down to the support area of 188 and maybe even lower. I'll give it a week to 2 weeks. Next, gold. New high a month. Looks like a potential new high close. And most importantly, above the bear trend line, which is the top of a fairly sloppy, but not too bad looking downward slanting channel. Channels are not, by any means, always perfectly parallel for the top and bottom lines, period. They should be pretty close to being parallel. So what does pretty close mean? That's a good question. How close is close? This is borderline, okay, not great. So I'm saying the bear trend line is a bear trend line. Was it really a channel? Well, maybe. But the bear trend line's broken. That's the key point. Now I'm looking for a move up to 34.78 and very possibly above recent highs in April. New high for the trend up. Bullish. Silver, as you see, taking off like a bat out of you-know-where here. Pretty strong. Next stop on the upside would be 35.80. Now, up to and including Friday, there was no sign, in my opinion, that this was about to happen, except the overall bottom does contain one of my ER buy signals at almost the lowest low. So that was a great one. We had a really great one back here as well, too, on August 8th to 24. And a nice sell signal. Not that many, frankly, in silver lately. Now, bullish on silver and gold, and looking for a test of recent highs. Copper, platinum is not quite the same. We had a lower low today for the last week and a half after being overbought in a resistance area, and it did break below. Today's high is up against resistance, and it just couldn't have so far, the upside follow through to get into it and stay there. So platinum momentarily is kind of a separate situation. I can't really turn bullish at the moment on platinum, although I'm very suspicious. So I have to look at the resistances stopping it and turning back down. But again, my confidence level on that opinion is fairly low. Next, high-grade copper, new high for a couple of months, or a month and a fraction, rather. And momentarily, it slipped back down below those previous highs, which can be very dangerous. So if it doesn't close above 4.89, I'm going to be a little skeptical about it. But again, it's not closed yet. But it is trading well below there. And the high is right smack against my resistance line perfectly. So what did it do? It got almost overbought in a resistance area, in the new high ground, and slipped back a little bit too much. For my bullish comfort, I think this is a little bit more bearish than bullish. New highs can't hold. Resistance area, almost oversold. Significant pullback. We'll see. No comment other than that. Beans, oil, meal, corn, wheat. Oh boy, the grain market really doesn't have the follow-through strength that I want to call it a beginning of a long-term bull market. Lots of sideways movement. Big bottom formation could be developing. It just isn't behaving the way one of these formations should. So now, all of a sudden, we have another new low for about a month and 2/3. The close is current quote, is currently at its previous lows in the early May. Closing lower than we are now, fairly obvious, a bit bearish. Closing higher than where we are right now could be a minor buy signal because it didn't have the downside follow through after making new lows. I don't know. It's on the edge of the cliff and trying to keep its balance. So it could start falling, or a little bit more of a rally, gaining its balance, could start to bounce back up again in the same range. Soybean oil did get oversold today. First time in a while. So a bounce is in order soon, not necessarily starting today, but soon. And since we're almost low in last, we could get a little more overbought easily, no problem. And we could even get as low as 44.75. But I hate to go. I think it's stupid to go short when you're oversold. You're asking for trouble. Now, some people are momentum traders. They might like this kind of situation, but I'll bet they have a very, very protective point of view and tight stops, which I agree with 1,000%. So, not really expecting a turnaround immediately, but that could happen. Oversold, could go down a little bit more. The point I'm trying to make at the moment is there's no huge long-term bottom that I can come up with yet. I'm really struggling. We had a breakout of a head and shoulder on May 14th, but it didn't hold. The next day, it immediately failed and closed below the neckline. I've kept the neckline because it's a legitimate trend line of sorts, and the one across the bottom, but I've canceled the markers for what I thought was a first shoulder and a second shoulder in the head and the second shoulder, inside shoulder, and the last shoulder hollow in March, because the neckline just got obliterated. Slightly bearish short term, but looking for the beginning of a bounce soon. What about meal? There's nothing here. Rock in a hard spot. Dangerously close to making new lows for many, many months. I'm neutral to bearish, unless it starts closing above recent rally highs. Corn, same commentary, almost exactly. Very close to making new lows. We've got an outside down day today. We've got a bearish engulfing. We're not oversold, but coming fairly close. So maybe we're going to get down into support, maybe down to 431, 431, 432, and bounce, because then it'll be oversold, still in support. I think that's going to be the more likely story for the next, well, for this week. Wheat, nowhere near overbought or oversold. A little bit of a rally this morning, gave most of it away. Slightly higher on the day. No upside breakout, no downside breakout. Damn cough. Sorry about that. So, I'm between a rock and a hard spot, very neutral. But favor the downside because it just can't seem to maintain the strength. Next, cattle. A little bit of a rally, trying to make its way up. The trend is definitely up. And if you don't have much to grab onto, what's the major trend? Up or down? And that's it. It's up. So now I have to look at, are we going to take out Friday's high? Is it going to be on the close? That's going to be constructive, bullish. We had a sell signal that worked for a day very nicely. So that's not something that really failed. It did work. It just didn't produce a huge down move. A very significant one, but it only lasted a day. And that's great. Remember, ER1 goes short, and it went short at approximately 210.5. And let's just take half of the down move. Got down to 27 1/3 in 24 hours. Next. So I'm friendly. Can't help it. Hogs are trying to make, and did make, a new high for a month. They're close to attacking the high of the sell signal that worked very nicely for a couple of days. This looks like it's trying to break out to the upside, but not quite doing the job yet. So I kind of have to wait to the close to make a decision. I do not like the fact that it poked above resistance and didn't stay there at the moment. Pull back down below previous highs, and if it closes lower on the day, that's just simply a failure, and I would look for a break. but we're still higher on the day somewhat and still around that resistance level. So we just might be trying to push through. Kind of ambiguous. Shell, a stock, gapped up. Okay, I'll put my usual marker. From the high of Friday, we've got to the low of today so far, that gap. That gap was closed. That gap was closed. This one below the market has not been closed yet. That one happened back around April 16th. This one could be closed. It is now getting back into a little resistance area. Pull that over a bit and pull this over a bit too. And you'll notice that this is also a leftover gap, two of them. And where that is for both gaps, the same price levels, 68.70, 80, let's call it 68.80. So I am expecting that at a minimum, and that doesn't close the gaps. The closing the smaller gap from the earlier time frame was 69.30-ish. But the bigger gap is just a little higher, 69.56, so why not get there also? And since it's looking pretty good, down first to close this little tiny gap in this week, then up more to a new high. I don't like saying that because it implies the overall stock market might be going up. And we are now, by the way, up about 80 cents to a point on the E-mini at this moment. We'll get to showing you that in just a second. What about Apple? Tiny higher high, no big deal. Barely higher on the day, 22 cents on a $200 stock, nothing. Can't get above the previous bear trend line. I could pull us to across that high right there. I don't see why not. Okay, I'll leave it there. So we got a little ways to go to get to the resistance level, and that is a gap closure, and I should do this. Okay. So it was closed completely, actually back here. Now got oversold at support, turned around. Been a few days, came back up a little bit. I'll say a little higher. I really don't have a strong opinion on Apple at the moment. What about Tesla? Finally finished closing a gap from about 5 days ago. Done. Good. One more gap to close down here, a little tiny one down there, and this one way down here. I'm a little bit skeptical at this point as to whether that's going to get closed. If I saw some kind of a top formation or a gigantic bearish reversal or something like that, then I'd put this back into play, and maybe we'll get down to 243, but at this time, doubt it. And this is also below support, a little less likely to be closed at 278. But I certainly am not ruling out a test of 290 and down to close this gap at 307. And that is my expectation for Elon. Trump kicked him out. Carvana. Almost a bearish engulfing. Last time I took a look at this a few hours ago, it was almost at the low of the day. So I was telling my partner, wow, this could have a bearish engulfing sell signal. It didn't. It turned right around and popped right back up. And of course, we did get a little rally in the indexes at the same time. No surprise. But if it gets below and stays below unchanged, gets below yesterday's lows and then stays lower on the day, it will have a red bearish engulfing top, in my opinion. And then I would be looking for a move down to close the gap down here at about 262. Definitely within the realm of potential or probability. And I'm not ruling out a move down to support at 290. Now, I probably could have drawn a trend line in here across that important high, and a horizontal flat line is right against these lows. Look how nicely it stopped once it came back down to test previous highs, which is support. Very nice. Pardon me. Trying to get rid of this cold. So, next, the E-mini. Here we go. Coming back up, about 60 cents higher. Not that big a deal. 1 minute chart, popped to the top a little bit, like I was alluding to. Now we're testing a little bit of support. We'll see what this can do. I don't have much faith on any major significant rally. I already said that at the beginning. You guys have a great day and profitable trading to you.